the engine running, with respect to all these consumers now will travel and they'll buy goods, whereas, before we were worried about maybe a tapped U.S. consumer. Well, you've got this pent-up demand now from Chinese consumers. So, yeah, it's going to make the Fed's job harder. It's going to make global central banks' jobs harder. But, from an economy standpoint, it's a good thing. Now, as far as what are the implications, we're favorable on commodities. We think this will be one of those things that drives the next leg higher for oil and for copper and other commodities. We like the energy sector. We think that is a sector that continues to be very undervalued. And, as energy stabilizes at current levels or goes higher, we think that sector will do well. I think the other implication is I think it moves the asymmetry for interest rates to the upside, right? And with respect to if the Fed is increasing interest rates, but you've got consumers who are revenge traveling around the globe, don't really care what the Fed is doing. Yep. That's going to make the Fed go further.
Hey, great to get your takes. Thanks so much for joining us, Samir, Samana, and Robert Tipp, talking to us about the market effects. Coming up, the morning calls, and then later, more pain to come. The darkening outlook for 2023. We'll have that conversation with Christopher Zook of CAZ Investments still ahead. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
This is the countdown to the open. I'm Matt Miller in for Jonathan Farrell. Let's take a look at the markets right now. Turning red. We had decent gains on S&P futures this morning, and now we're unchanged but down. The same is true with NASDAQ 100 futures, as well as the small caps. You can see Russell 2000 is off. The U.S. 10-year yield coming down, as well as the 2-year yield and the 30-year yield. So investors are buying these bonds and pushing the yields lower. Let's get to the morning calls right now. First up, Cantor Fitzgerald naming Palo Alto one of its top picks for 2023, pointing to strengthening growth prospects there. Next up, Janney initiating coverage on Generac with a buy rating. If you live in Buffalo, hopefully you have a generator. That highlights the company's consistent free cash flow generation as well as the current weather conditions. And finally, Baird cutting its Tesla price target to $252 after the stock was decimated yesterday. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full service shadow banking with nobody in charge.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
That is the opening bell on the New York Stock Exchange. I'm Matt Miller in for Jonathan Farrow. We are moments away from full trading on Wall Street, and you can see that we're little changed on the S&P already. After gains this morning, we are looking at not a lot going on at the open. NASDAQ 100 futures down about 0.2%. Russell 2000 futures unchanged as well this morning. Take a look at some cross-asset pictures here. We see the euro dollar at 106.50, so the same as it was yesterday. I do know that the pound is up through 121 as the dollar lost some strength this morning. That was really giving a tailwind to risk assets, but the Bloomberg Dollar Index coming back a little bit and hurting equities. The 10-year yield at 383.73, so coming down a little bit from a relatively high level after a sell-off yesterday, and NYMEX crude at 79.28 a barrel, holding steady just around that $80 level. One stock to watch at the open again today is Southwest, the airline facing another 3,000 flight cancellations. The CEO, Bob Jordan, expecting schedules to get back on track by next week as the disruptions grab the attention of lawmakers on Capitol Hill. Bloomberg's Abigail Doolittle joining us now with more. Good morning, Abigail.
Good morning, Matt. And yes, this story continues to be really pretty brutal, especially for those stranded, unable to get home. Now, of course, the cancellations you were just mentioning today, more than 3,000 cancellations or thereabouts on the day alone. This means that it puts the total cancellations since December 22nd because of the blizzard at more than 15,000. And it's hitting some airports more than others, such as Chicago and Denver, along with the San Francisco Bay Area, some of those smaller airlines. Now, you were mentioning the government. It's very interesting, Matt, because we do have U.S. Transportation Secretary Pete Buttigieg vowing to hold the airline accountable. Apparently, he did speak to CEO Bob Jordan about what he's calling a meltdown, and that somehow that they are, again, going to find some sort of accountability. Now, this isn't just about the blizzard. It could also have to do with the short staff after COVID, lots of staff sickness relative to RSV and flu. But some are saying that the biggest issue is the outdated computer system, and that means that these cancellations are continuing. So today, of course, 66% of the shares, flights canceled out of the total share, 66%. Just a couple of days ago, almost their entire schedule. But even tomorrow, 13% still will be scheduled, again, because of that outdated computer system. And some folks are talking about the idea that this is going to hurt profitability. Citi, one piece of it could be they pay their staff more, so they have all of these stranded, not just passengers, but also staff that they're paying. So lots of issues piling up for Southwest, Matt.
Yeah, Helene Becker saying that, well, she still likes the stock because they have a very strong balance sheet, but they really haven't invested enough in IT in the past, and that's why they're in the situation they are now. Abigail Doolittle, thanks very much for that. Now, tech, outside of, airplane IT, having the opposite problem. Demand concerns continue to weigh on not only Tesla, but Apple as well. Those two companies shedding a combined $1.5 trillion in market cap throughout 2022. Bloomberg's Ed Ludlow joins us now out of London. And Ed, I noticed Apple stock fell to the lowest level since June of 2021.
Yeah, there is concern actually both on the production side for supply and demand doubling up. Apple down 0.1%. Tesla now 2.5% higher. I have to point out that we've traded really choppy since the open. At one point we were lower. We're now almost 3% higher. The reason that's important is that if Tesla remains in the green, it's snapping 7 straight sessions of declines, which was its worst run since September of 2018. If we were to fall for an 8th consecutive day, that would be Tesla's worst run on record, as you also see Apple just slipping into the green on my screen. The story around Apple is really interesting. We got some data overnight from TrendForce, the consultancy saying that based on the disruption that we saw in China, this is on the supply side, that actually they've downgraded their iPhone 14 production forecast for the full year 22. Remember, they're currently in their fiscal first quarter to 78.1 million units. That's the supply side. I know you mentioned the demand side, Matt. Remember, right now, it's the higher end iPhone 14 Pro and Pro Max models that the consumer wants, not necessarily the lower end iPhone 14. So that's an issue. Tesla's an interesting one. The story seems to be around shifting increasingly away from this key man risk narrative with Elon Musk towards concerned about demand. When you think not just about the price cuts in China, the Reuters report that they're pulling back or scaling back production in Shanghai in the first half of January and then halting production altogether in the second half of January for upgrades. And again, they introduced that $7,500 credit or incentive through year end here in the United States for Model Y and Model 3. That's built up this concern around demand. But look, some dip buyers, Matt, we're up 3%.
Yeah, well, it's no wonder, right? After the incredible drop that they've had, it doesn't matter, I guess, if we're up 3% or down 3% today, because the stock's lost about 70% of its value this year. It was a $1.2 trillion company, Tesla, last year, and now it's worth less than $350 billion. Ed Ludlow, thanks very much. Check back in with you in a little bit. Right now, I want to get over to Christopher Zook of CAS, expecting earnings to feel the pressure in 2023, writing, quote, "There is still a lot of pain ahead, and we will continue to see a steady unwind of company earnings over the next 12 to 18 months. The consensus S&P 500 earnings forecast is down 5% over the past 3 months, and we expect that trend to continue." Christopher joins us now to talk about how much pain and how the path is going to look, Christopher, because the consensus seems to be, at least for stocks, that the first half is going to be tough, but then we'll have a recovery in the second half. Strategists that we survey are looking at about $210 in S&P 500 earnings. How do you see it?
Well, it's something that's really kind of funny to think about. They don't give a lot of reasons as to why. And with all respect to them saying the first half is going to be bad and the second half is going to be better, there needs to be some real reasons for that. And in this particular case, it's hard to point to that uplift, if you will, in the second half. Right. There could be improvement in demand from consumers. There could be improvement in margins because of the fact that inflation pressures abate. There could be a lot of different reasons, but there's not anything that you can point to that is tangible. So yes, things don't go down straight and they don't go down forever, but right now it's hard to see what would cause that uplift in the second half. So we remain very concerned about margins. We remain very concerned about where exactly the economy is going to be in the second half of 2023. And we know the first half is going to be tough.
Well, Christopher, this is what I find really interesting. If you talk to a strategist, they'll tell you the market's going to continue to get clobbered as the Fed continues to raise rates. And they expect the Fed to do that, or at least hold steady at, 5% or 5.25% through the first half of 2023. But then strategists will tell you the economy is going to get so bad, unemployment's going to go up so high, earnings are going to be hit so hard that the Fed's going to have to turn around and cut in the second half of 2023. However, you still see $210 forecasts by the street at the end of 2023. And I wonder, if the economy does indeed get that bad, don't we need to see earnings cut even further?
I'm chuckling because of the fact that it's hard not to. When you think about this, these are the same people, again, with all due respect to my peers out there in Wall Street, these are the same people that were forecasting 22 earnings were going to be continuing to grow to the moon. So listening to them for 2023 earnings, it's just hard for me to accept that they're going to be right this time when the mantra that you just described about the economy getting worse, the earnings getting worse, et cetera, but they're not cutting earnings, it feels like they're behind the curve again. And that means that the markets are likely not going to anticipate, that trough of earnings just yet. Now, to be very clear, at some point, the focus will leave earnings and will focus on valuations and interest rates. Nobody knows when that is going to be. The market is a forward-looking animal. But what we can say is that as the economy begins to slow, as the consumer slows, and as less Teslas are being bought, and everything else that we've been talking about this morning, as that happens, you're going to see, analysts have to take literally a meat cleaver to earnings estimates as we get into the middle part of next year, and that's a very dangerous psychology for the markets. Then maybe by the end of the year, people start to anticipate the Fed cutting. And when that happens, people will be willing to look past earnings to the other side of the cycle.
Yeah, but what happens if the Fed doesn't cut, Christopher? And I mean, Jerome Powell has been pretty consistent in his message this year. He's going to continue to tighten financial conditions until inflation is back towards 2%. And I think he wants to see it pretty close, not 4, but better than 3, right? So what happens if the economy takes a hit because of the Fed tightening rates, earnings take a hit because of that as well, but the Fed doesn't cut? Then where do we see the stock market?
Well, that's stagflation, and we haven't seen that in a very, very long time, but history shows us that is the worst possible environment for stock prices, period. There is no exception to that statement. So it is something to where the markets really are, I think, hoping right now that you're going to see the Fed raise rates and then start dropping them again. It rarely works that way. It could this time, but it's really rare that they would do that. Normally, they're going to get to peak rates, and then they're going to wait a while to see how long it takes to trickle through the economy. What we're seeing today is the result of the Fed hikes that happened 5, 6, 7 months ago, not what happened in December. So today is the next step towards the Fed basically stopping the rates, going higher. And then at that point, they will wait and we'll see data. And then at some point in likely early 24, maybe late 23, they will start cutting rates because the economy will be so bad. But you're right. They have to get the inflation rate down, not just to 4, and really, they may not wait for 3. They may wait all the way until 2 before they start to lower rates aggressively. But valuations in a stagflationary environment with margin compression and a weak consumer, that's a really tough environment for stock prices.
Christopher, great to get your perspective. Really appreciate you joining us on the Open today. Christopher Zook there from CAS. Now, 56 million shares in Robinhood, the trading platform, are part of a new ownership fight. According to court documents, FTX founder Sam Bankman-Fried used a $546 million loan, nearly $500 million or more than $500 million loan from Alameda Research to buy that stake. And of course, he got that money, it looks like, by taking it directly from FTX.com clients. Bloomberg's Ed Ludlow back with us for more. And Ed, this is interesting because it's not just a fight among creditors and clients of FTX, but it's a fight among jurisdictions as to who gets to control this stake.
Yeah, there are a number of entities that are claiming an ownership of that stake. What we understand from the promissory notes that were outlined in these court filings is that it was actually Caroline Ellison, who's the CEO of Alameda Research. She authorized the loan for $546 million from Alameda Research to SBF and also Gary Wang. That money was put into an entity called Emergent Fidelity Technologies, and they used the funds to buy the shares in Robinhood, which, as you said, amounted to an 8% stake of that company. Now we have a situation where FTX, an individual creditor of FTX, and also BlockFi, the now bankrupt crypto lender, all claim ownership of this stake in Robinhood. BlockFi claim ownership because they say that Caroline Ellison pledged the shares to BlockFi just before FTX's collapse, in lieu of or as collateral for a loan which BlockFi made to them. You can see how tangled this web of money is. It's just case in point of what's happening as we wade through the FTX fallout. Meanwhile, 4 FTX customers have brought a court action to basically put themselves ahead of preferential creditors, saying that actually, because we were customers, you should easily be able to trace the funds we put into FTX. They were never owned by FTX and so should not go to creditors when we come to sorting out the allocation of those funds as we resolve this financial mess.
And it's not just the customers, the creditors, BlockFi, but it's also an issue of jurisdiction, right? We hear Bloomberg reporting at least that Antigua wants to hold this asset and divvy it out. New Jersey and Delaware also, they filed for bankruptcy here in New York. I mean, everybody wants a piece of this.
Everybody wants a piece of it. What's interesting as well is that the origin of the $564 million, for example, is slightly up for dispute because, as I said, according to these court filing documents, Caroline Ellison had pledged the money, or the shares, sorry, the stake in Robinhood, in return for the deposit or loan that BlockFi had made to that entity. But she'd also passed the loan on from Alameda to SBF as an individual and Gary Tan in a 90-10 split. So it's incredibly complicated.
Yeah, absolutely. And fascinating as well. Ed Ludlow, I guess we should be grateful that there's at least not more contagion out into the broader financial industry. Right. Ed reporting to us from London. Coming up, the travel chaos continues for the airline industry.
Southwest accounted for more than 80% of all cancels yesterday. They're just behind the curve here, and they probably won't get caught up until the weekend at the earliest.
Plus, the bull case for energy stocks in 2023. We'll speak with LPL Financial's Quincy Crosby on why she's overweight energy next year. This is Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
What do you say to the cynics that say, look, it's all nice and fine, but a lot of it is greenwashing, and you're not a good company, you're just a less toxic company than some of the other oil majors?
Well, the first thing to say is that, you know, I'm a big believer in we need to put ourselves in other person's shoes in life in general. And so I understand that point of view, and I get that people have that perspective. I don't agree with that, obviously, but I understand where they're coming from. We have an enormous challenge as society, which is to provide the world with reliable, affordable, and clean energy. That's what society wants. That's what society needs. And I believe in my heart that a company like BP is actually one of the few companies in the world who can actually make that happen. We can talk about the things that we're going to grow and over the coming years, and I find it hugely exciting and energizing for our organization. But that's what the world needs, and you simply can't go against the grain of society. You can't defy gravity, and that's why we're making the change that we're making.
Times in Business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
Southwest accounted for more than 80% of all cancels yesterday. They're just behind the curve here, and they probably won't get caught up until the weekend at the earliest. They had a confluence of a lot of events. Everywhere they were, they had weather, and the worst of it is their systems are just not equipped to handle it.
That was Cowen's Helene Becker. Southwest canceling more than 5,200 flights in 48 hours. The CEO, Bob Jordan, delivering an apology to frustrated travelers.
I want everyone who is dealing with the problems we've been facing, whether you haven't been able to get to where you need to go, or you're one of our heroic employees caught up in a massive effort to stabilize the airline, to know is that we're doing everything we can to return to a normal operation. And please also hear that I'm truly sorry.
Just show me the money is probably what consumers are saying, and that's what Capitol Hill is demanding as well. President Biden and the administration tweeting, quote, "Our administration is working to ensure airlines are held accountable. Pay me." Bloomberg's Ryan Bean joining us now for more. Ryan?
Yeah, thank you, Matt. So last night we saw that both Bob Jordan apologized, and he during that his his fifth apology, I think. He said that they're optimistic that they might be able to get back on track before the end of this week, before next week. But looking at the flight cancellation numbers today, we saw the cancellations for Thursday are now back above 50%, around 58% of their scheduled flights. That was about 22% yesterday. So they're still very much dealing with this. We saw Pete Buttigieg, DOT secretary, speak to Bob Jordan and union leadership yesterday. Then he goes on CNN and NBC Nightly News and uses words like meltdown to describe Southwest situation, and that he's emphasizing that the department's going to hold them accountable. So this story is very, very much still unfolding, and we're going to keep watching it.
Yeah, Ryan Bean, Bloomberg News reporter, thanks very much for that. We'll continue to keep covering it for sure. Let's get back, though, to the broader market story, and especially the need for energy. A lot of investors are still long, even after the great year they had in 2022. One of them is LPL Financial's Quincy Crosby, staying overweight energy and laying out her outlook for next year, writing, quote, 2023 begins with the same focus as 2022 finishes. When does the Fed finish raising rates? Until then, we will have to endure the bear market, and it will remain a trader's market. Quincy Crosby, I'm pleased to say, joins us right now. Quincy, good morning, and thanks so much for your time.
Thank you.
We do have the change in the calendar, but other than that, it seems like we're on the same path in terms of the Fed, in terms of the markets, and in terms of investors being long energy. How much longer will it last?
Well, I mean, in terms of the next year's market, 2023, the story's the same, but the chapters are different. And the process and the Fed rate hike campaign is changing. I mean, already you're seeing the Fed funds futures market looking at perhaps 25 basis points for February 1st rather than 50, and another 25 basis points, but still a rate cut in 2023. But getting back to the energy market, yes, we need reliable energy. And this is natural gas. This is also oil, needless to say. And the underpinning for our overweight is based on just that, the need to get to a period where if you want, countries are going green, they're transitioning, but you cannot deny the importance, especially now as oil and natural gas have been weaponized because of the Ukraine-Russia war, that we need to make sure that it is available. Also, we see that the Biden administration is planning to fill the Strategic Petroleum Reserve. That takes oil out of the reserves of some of the big integrated names that will go and provide the oil for the Strategic Petroleum Reserve.
Quincy,
in addition, China. China. That is the big one.
Yeah, China could also be inflationary, right? If the if the reopening really proves a lift to commodities. So do you continue with a defensive strategy, not just oil, but also, utilities and, telecoms as the Fed continues to raise rates, and staples as people have to shift down in terms of what consumers have to shift down in terms of what they're purchasing?
Well, yeah, I mean, we're overweight in staples as well, and healthcare. However, with that said, we've been adding small cap and mid cap to the portfolios. We see that we will be inching ever higher as we get through 2023, as the Fed finishes up, and also as, again, China comes back online. No one is expecting it to be an easy transition for China, by the way. It will probably take the second half that they get rid of the COVID lockdowns, even the voluntary lockdowns right now, as folks are getting sicker and the manufacturing picks up. Yeah, there is a worry, there's no doubt about it, that the demand for commodities, look at iron ore, look at copper, and again, look at oil demand will pick up. But we don't think it is going to push inflation to the point that the central banks have to continue the aggressive rate hike campaign that they began this year.
Well, if they turn, Christina, if we see inflation coming down and the Fed not only plateauing but start to cut in 2023, when do you know it's time to sell your energy, staples, and healthcare, and to buy into the stocks that are going to profit from that new era?
Well, one of the things that you're going to see is that the transition, we do our technicals, 50-day moving average, 200-day moving average, but one of the things we haven't seen is an escape velocity in the market that moves us from staples to consumer discretionary. That would be one of the very first signs that we are leaving the bear market after, hopefully, a sell-off that provides compelling valuations, well below the 17.3% forward earnings that we have today. And then we move out and just, again, escape. That velocity has been missing in the previous calls that the bear market is dead. Once we see consumer discretionary getting a major bid, and technology, by the way, because rates will start coming down, needless to say, we know that we will be moving into the new era. And that's going to be important, but it's not a science, as you know. Right. It's as much, I think, an art form, but you've got to make sure that the technicals are matched by the fundamentals.
Well, and you're an artist with whom we love talking, so I really appreciate your time. Quincy Crosby, wish you a happy new year. Let's get to the trading diary now, what you need to be watching this week into the end of 2022. Pending U.S. home sales coming at the top of the hour. Another round of jobless claims will be revealed on Thursday as well. Plus the ECB publishing its economic bulletin for the end of the year. More inflation data then on Friday with CPI numbers out of Spain and Russia. And finally, the bond market closing early for the New Year's holiday. I will be heading to Madison Square Garden to watch Fish into the new year, and then hopefully Ohio State beats Georgia to play either Michigan or TCU for the national championship. This was the countdown to the Open. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks 24 hours a day. Bloomberg, your global business authority. When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands, and it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with number fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their million-peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for number fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, Pepsi goons bomb their own trucks. And when I visited the MBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees, but for people who couldn't afford the money, he would just represent them pro bono.
The alliance, they say, is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010. After staying for almost 1 year in the hospital, he died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi Number Fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's Number Fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker but pretending to be a foreign person.
Federal investigators have detained one man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Benegold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Benegold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Benegold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Weinergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why he may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Weinergold as an opportunity to leave that troubled home. Weinergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Weinergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Weinergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Weinergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
The threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there, like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is, when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environments, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small and space is really big. And then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then like, well, let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if they, if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about.
This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. Asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future, maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it, and I just watch it until it stops going up, and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter, it's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok finfluencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities and the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't. And and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people like want to unpack that. And so my audience is a lot of them are younger investors who are looking to hone their skills.
Tech and write up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just like attacked that video and were like, you explain things so much better than my boyfriend or my professor, or like I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us.
The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse.
How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly, this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwit, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price, before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million.
Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign the ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
The GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that They're interested in how retail brokerages make money and whether they're keeping the best interests of their customers in mind. But it's pretty fuzzy as far as what they would.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Meet Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. But while that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African-American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement, encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud, or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted, and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. Education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. Very good. 9th class. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation. A language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
refer to the dictionary also, okay, and find out the new meanings, as well as you're going to describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be in the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or, a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into a medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, She came to the Gauridoddi campus and then she toiled very hard for 1 year despite many problems. And today I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities and most of them got institutionalized now. So for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students so that whoever is interested in whatever activity they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change all that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to a prosperous orbit. I think in future, this is going to be a game changer for the marginalized in this country.
If you look at a thermal image of a city and then compare that to a map of vegetation, you'll find that where there's greenery, the temperature is lower. That's because things like asphalt, concrete, and shingled roofs absorb more heat from the sun than trees. This is the urban heat island effect, and it accounts for higher temperatures in cities, often by several degrees compared with their surroundings. It's becoming a huge risk to human health as growing urban populations exacerbate the heating effects of climate change. Heat waves kill more people than any other extreme weather event, more than tornadoes, hurricanes, and even floods. That's why urban heat island mitigation strategies are being studied in Singapore by a group of researchers. The government-backed project called Cooling Singapore is now in the process of combining everything they've learned to create a digital tool that can help cities all over the world, starting with Singapore. In Singapore, close to the equator, temperatures regularly rise above 32 degrees Celsius or 90 degrees Fahrenheit. And the city structures only make it worse.
And that is also the case for Singapore, which is basically a concrete jungle, more urbanized, more developed city. And even in Singapore, what you have is a situation whereby there's a temperature difference of 7 degrees Celsius between the more urbanized and the more rural areas.
The government has taken drastic steps to keep temperatures down. This is Gardens by the Bay, an award-winning park. And inside this greenhouse is a pleasant 24 degrees. That's because the dome, along with 24 nearby towers full of thousands of people, is chilled by what's probably the world's largest underground district cooling system. It uses a large central plant that cools water and then pipes it into banks, residential towers, an exhibition centre, shopping malls, and the city's iconic Marina Bay Sands hotel and casino complex.
So one of the biggest perks of using this system for the buildings is that they can save 40% in terms of electricity usage compared to your traditional air conditioners.
And with Singapore relying on natural gas for most of its power, this new system means emission savings equivalent to removing 10,000 cars from the city's roads. That has big implications for the rest of the world. If things stay as they are, more than a third of the world's electricity could end up being used to cool buildings and vehicles by 2050.
As the world gets hotter, gets warmer, there is a greater need for air conditioning and as well as refrigerators, for instance. And the more people are buying these household appliances, the more energy usage they use, and they release heat more, and that then exacerbates climate change.
It's a vicious circle. And so since 2017, researchers at Cooling Singapore have been identifying design solutions that reduce our need for so much cool air in the first place.
One thing many cities have in common, and that's the importance of vegetation. That's a very important measure to mitigate the urban heat because of the shading effect, of course, and the psychological effects of the vegetation, and also because of the possible evaporative cooling effect of the vegetation. Vegetation can be, of course, on the ground floor in form of trees and shrubs, and you can walk under them. This is the so-called canopy layer that the vegetation forms above us. But vegetation can also go up the facades of buildings, and it can go to the roof of the buildings.
Luckily, Singapore has been striving for the garden city feel for quite some time. It was a vision initially introduced by then Prime Minister Lee Kuan Yew in 1967 to make life more pleasant for people. And today, Singapore is one of the world's greenest cities in terms of urban vegetation. Kampung Admiralty, a community centre that contains health facilities and social spaces, now provides more green space than the plot of land it was originally built on. It's topped by a roofscape of staggered terraces covered in local plants, which functions as a community park. And a village green in the centre that contains farm plots for residents to tend to. Park Royal on Pickering was designed as a hotel in a garden that doubled the green growing potential of its site. There's now 15,000 metres of sky gardens, reflecting pools, waterfalls, planter terraces and green walls. And the government has big plans as well.
Singapore actually has a plan to plant 1 million trees and add more green spaces over the next 10 years. It is actually a mix of one thing to reduce the urban heat island effect, but on the other hand is also to get the people to be more connected to nature.
But it's not enough. The city-state has still been warming twice as quickly as the world average over the past 6 decades. That's why Cooling Singapore has developed a catalogue of other potential heat mitigation measures.
When you try to mitigate the urban heat island effect in a city or in any building, in a village as well, the first place to start is by shading of the windows. You have to keep areas clear so that the wind can move through it. Water of a certain depth can act as a very good thermal buffer. If you have to construct heavy buildings such as high-rises, at least you can make the surface, the facade, less heavy, and you can protect it from direct sun penetration. You have to make sure that no combustion engines will be in the city in the middle, in the medium to long-term range. So ideally, the electricity production is outside of the city, and you bring just the clean electricity into the city. You can at least minimize the use of energy in the city, and you can start to slowly convert the roofs, the facades of the city into production areas for renewable energy. In Singapore, unfortunately, this is a limited option, but in the long run, it could produce up to 20-25% of the energy, of the electricity needed in Singapore if all the roofs and the areas in the buildings, on the facades would be used to do that.
With so many different ideas, Cooling Singapore is also designing a virtual model of the city to test them out. It's called a Digital Urban Climate Twin, or DUCT, that will calculate how each element of the city's design will impact the urban heat island effect.
That means we model not only the geometry of the buildings digitally, but also we model the transportation, the insulation, the temperature, the radiation coming from the sun, the weather, the local climate, the even very, very microclimate of the city, the water, the movement of people in the city. We can invent scenarios, we can design scenarios, test them before we actually build them, and if they test very well and we are sure that they will function, then we can start to build them and put them into reality.
Singapore will be using this new tool to figure out which actions it should take next. And the model can be applied to any city, whether it needs to keep heat out or keep heat in, which will ultimately save energy, slow climate change, and improve our quality of life.
So this is something that Singapore will be able to export, maybe even together with its city development systems that it already has. Singapore is one of the very few cities in the world that really combine this scientific approach with a very well-established urban redesign and urban design approach. Through its agencies and the combination of its agencies, it has achieved a lot in the past. If it keeps following the scientific path and the combination with the other knowledge in the city already, we think that it will be a very comfortable and very livable city in the future, even more than today.
Times are tough. Jobs are scarce. It's risky to be outside and around others. Seems like there's very few ways to make extra money during a pandemic. So I guess I'll just hunker down and binge social media until this all blows over. Wait, don't these people make money? How do these people make money? Streamers, YouTubers, Twitch stars. How do they make money? Is it a lot? Is it a lot of work? I know, I gotta ask somebody in the biz, and I got just the guy. Austin John Plays.
This is your full-time job now, right? As of November of last year, yes. This was always just kind of like a side thing. Like, any money that I made from doing my videos and whatever else, I never touched that because I didn't really think of that as being like real money. And then it started coming in more and more. And then it was like I hit my first day that I broke $1,000 and I was like, this is actually going to be money.
How did the YouTube channel come to be?
When the game Pokemon Sun and Moon came out for the 3DS, there was like things that I learned about the game, and then I wanted to just share that information with people. And at the time, I didn't have any way to capture a screen or anything, so I found like generic footage and I kind of put it all together with so much editing. And that video got 6 views. And then 2 days later, I made another one, and that one got 12 views. And then I just started pumping out more and more content, and people were like, this guy knows what he's talking about. It really just started building on top of itself, and then it was like, my channel really focuses on tips and tricks. So I play a straight 18 hours, and I'll finish the game or get to about the 40-hour mark, and then I'll make my first video. While I'm going through, I have a giant notepad and just scribbles everywhere, and I make these notes of like the things that stumped me, so I know the things that may stump other people.
What do you need to think about if you're building your YouTube channel? 1,
You need to do something that you're passionate about. Not that you like, not that you think you're gonna make money on, something you're passionate about. The other thing is something that other people are passionate about. It holds a special...
To see further evidence that we really are working through a reopening post-COVID in China. I think there would be 3 factors that I would be looking at that are really the causes of volatility. And if we were able to work through some of those and saw the VIX back towards 20, we can start to see the normalization and perhaps even a fundamental reopening of the IPO market.
Gareth, is there anything in terms of visibility that the pipeline, is there any big marquee deal out there that the street's waiting for that will maybe kind of open the floodgates, if you will, that's just kind of sitting there, that boy, if that big deal comes, the big name, the big dollar amount, that's going to be a good omen for the IPO market?
I think you hit the nail absolutely on the head. Traditionally, the reopening of the IPO market is best done through a marquee transaction. If we look back last year, whether it was Porsche in Europe, whether it was Mobileye in the US, or China duty-free in Asia, we have seen those marquee deals. So I think for me, looking to next year, there is no shortage of high-quality assets in the private space, whether in private equity hands or with entrepreneurs or founders. But really, we have had to deal with an unusually challenging secondary market. And for me, this is less about a one-off transaction to spark activity and more about a fundamental addressing of the challenges in the secondary market, which will facilitate lower volatility and allow investors to price IPOs, which by definition are longer lead time in the market. So no magic specific asset, but more just market recovery and then a gradual normalization of assets coming through. Because there's no doubt that investors have appetite and will, as we saw last year, even in difficult markets, show up for the big marquee events. But for me, I want to see a healthier normalization of the market.
Gareth, we love having you on because you're global. And you just mentioned there the key marquee names that happen in Europe and US and in Asia. Are the investor base all, are you agnostic of that? Do we see appetite coming from Asian investors, European investors, US investors, or is still the pool of liquidity that's likely to be put to work coming from the United States for the 2023?
Yeah, look, to have a healthy global IPO market, you want the US investors fully engaged. There's no doubt in my mind they will start by re-engaging domestically, and that's why I think the US market will lead us out of this. There has been actually more signs of a healthier market in Asia in H2 of last year, and I think they've had less specific macro concerns to deal with in terms of inflation or otherwise. But for me, if you look at the European market, I think we'll take our lead from the US. They'll start in the US. When that starts to become healthier and we see more volumes, that will then translate here into Europe.
Gareth, in terms of trying to figure out the source of supply of IPO new issuance, we've got to talk about the private equity players. They typically have holding periods 5 to 7 years. And boy, the exit strategy has been effectively closed for many of these guys for the last 3 years. There's got to be pent-up demand there for some, liquidity events here via the new issuance market. What are you hearing from your private equity clients?
Yeah, I think what we're hearing from them is actually a very sober and very patient mindset. They're sitting on very high quality, big liquid assets, which they know and we know the public market would be very well open to receive. But they're equally realistic about the valuations we're seeing in the market at the moment. And they're also not under big funding pressure on their side. They've raised significant amounts of assets. So therefore, and they've also been hugely active in monetizing those during the 2021 market. So actually, they are in a pretty good position, really. They hold good quality assets. They can be patient because of the assets that they have been re-raising and also how much they monetized in 2021. So I would imagine that we would start to see them using the IPO market in the latter half of 2023 and then be pretty significant pickup in activity into 2024.
Gareth, and I know having spent a lot of time on Wall Street, I know the IPO process, it comes down to valuation. And the issuer has a certain view in terms of valuation. The underwriter of the market may have a different view. And we really haven't seen a lot of mark-to-markets on a lot of these private investments. And how concerned are you and other kind of ECM bankers about that valuation problem when and if, or when this market does reopen?
Yeah, it's a good question. I think it's quite sector specific. We have gone through a significant derating of the technology market, which has really been the poster child for the growth environment that we saw the low interest rate environment support so heavily through 2020 and into 2021. As we look forward, I imagine that non-tech sector actually valuations are quite attractive. And that's why we've seen a very buoyant IPO market in the Middle East over this last period, which has had good macro support. So I think for some specific growth-orientated assets, that valuation conundrum will be quite challenging, and there will be either a significant derating relative to some of the private valuations. But I think if you look at the broader market, and we are expecting to see a broadening out of the sector representation in the IPO market when we reopen, I think that will be easier for vendors to manage because actually, in many cases, secondary market valuations have been pretty attractive.
All right, so Gareth, just to summarize here, is it fair to say maybe more of the same in terms of activity in the first quarter, first half, than potentially a pickup in new issuance in the second half? Is that kind of the way you're thinking about it?
Yes, spot on. I think very patient approach into the beginning of next year. We would expect to see primary equity being raised as people address their balance sheets. We would expect to see spin-offs and potentially some equity-linked raisings. But overall, it will be a gradual normalization, and we would expect to see the IPO market follow likely in the second half of 2023.
All right, Gareth, great stuff. Appreciate it. Getting some of your time here. Gareth McCartney, UBS global head, co-head of equity capital markets. Again, it's been a tough year for new issuance. IPO market all but non-existent in 2020.
Look at that NASDAQ headline. NASDAQ 100 falling to the lowest since November the 4th.
Yeah, just crossing the Bloomberg terminal. So, kind of a weakness going into the end of this year. It's not what investors wanted to see. But again, a lot of folks are obviously turning their attention to 2023, so we'll have to see how that plays out. Hopefully the IPO market can get a little bit of legs under it. All right, let's get world and national news. We'll do that in London. Ritika Gupta joins us.
Thanks, Paul. Exports from the Russian gas giant Gazprom fell almost half in this year. The company's flows to Europe were slashed following the invasion of Ukraine. A number of European countries were cut off entirely earlier this year after refusing to pay for gas in rubles. Here in the UK, the rush to take advantage of post-Christmas sales lifted shopper numbers on Boxing Day, but that's likely to provide only temporary relief for retailers because inflation is pushing consumers to cut back on spending. Retail tracker Springboard says Boxing Day shopper numbers were 39% higher than a year ago when some COVID restrictions were still in place. Air travel is roaring back. The problem is there just aren't enough planes. Jefferies estimates there's an order backlog approaching 13,000 airliners. Boeing and Airbus are sold out for their most popular single-aisle models through 2029. The result, airlines have fewer seats to sell, which means fares will stay elevated. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg. Caroline?
Ritika, we thank you. Let's have a quick check on the markets because, well, as we just mentioned before we went to Ritika, the Nasdaq 100 falling to its lowest level since November the 4th. I'm looking at some of the single names that are dragging it lower, and it is some of the Chinese ADRs, Pinduoduo, JD.com, currently off by 6%, both of them, let's call it, as people start to try and digest just what a Chinese reopening trade really looks like, Paul, and indeed some of the nervousness around it. We were hearing that from the oil market, now being reflected in the tech market.
I don't know how this is going to play out. I don't know how if the Chinese know how this is going to play out. I mean, do you let your citizens get on a plane to go anywhere in the world without a test? I don't know. I wouldn't take that flight, I don't think.
Japan's not going to let you in if you don't take that test. I mean, I feel a lot of other countries are going to come out and say the same. We're going to dig into what's driving these markets at the moment. Of course, China being one of them. From New York, this is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes, have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Let's welcome you back to our global simulcast on TV and on radio. Paul Sweeney, Caroline Hyde, as we digest these markets live for you. Markets that turn decisively lower on thin trading, though.
Yes. Yeah, so we have the S&P off about 0.6%, but we were trading a little bit higher earlier, but just kind of rolling over here and on very weak volumes, as you would expect in the week before between Christmas and New Year's. But let's get some more details on those markets with Bloomberg Markets correspondent Abigail Doolittle. Abigail, what are you looking at?
Well, you know, Paul, it is really a pretty interesting day here because earlier the futures had been higher, suggesting that maybe we were going to see this Santa Claus rally go into full effect. But at this point, we have stocks lower. It's not entirely clear why. Like so many of the days that we've had recently, a low volume day, 22% below the already anemic volume. So it's not a ton of conviction that investors are selling shares, but there is that selling. Some of it may be related to some of the sentiment around Tesla. On the open, Tesla had been up more than 7%, maybe taking the markets higher, the idea that there's a buy the dip. And then, Caroline, you were just talking about that China weakness, that weighing on some of the big tech weakness here. Now, over the last 3 days, the official Santa Claus rally is the last 5 days of the trading year and then the first 2 of the next year. Right now, we're down about 0.5%. So Santa has not come to town right now, although earlier this day around the open, Santa had been here. So it's interesting to note that. Though Tesla, it's really interesting because this stock yesterday, the most oversold ever. Now it's coming off of that 20 level, rising higher, suggesting that you could see some technical buying. And speaking of technical buying, well, oil, last time I looked, it was down about 2%, taking that sector with it. One big question for 2023, can energy be the top sector again? Up 60% this year.
Extraordinary, yeah.
It's amazing.
I
Up 50%
so
the
missed
year
that trade
before.
in 2022. I was nowhere to be found.
Yeah, well, after up 50%.
You are not meant to be
I know.
long any of these individual markets.
I know.
All through ETFs, I'm sure.
Yes,
Sure.
of course.
Absolutely. All right, good stuff. Abigail Doolittle, appreciate it getting the market update there. Again, kind of a little bit of a weakness today, but I'm not going to make too much about it.
No, yeah, I think we need to just take a pinch of salt and maybe more long-term focus as well is when we look into 2023, not just whether energy trade is the one that Paul is or is not going to be missing, but what about the startup culture? What about companies that are looking for some sort of an exit? We just had a fascinating conversation, of course, with a UBS key member there when we were talking with Gareth a little bit earlier, all about Gareth McCartney, discussion of capital markets, IPOs. He thinks that some will be done, but from, of course, already listed businesses spinning off certain assets. What about the startups that are out there? What about selling? What about M&A? What about IPOs for them as well? We had a great conversation with Lux Capital general partner Dina Schucker a little bit earlier in the year, just in mid-December as we started to wind up Bloomberg Technology, the show there, and she told us what she's expecting for the year ahead. Take a listen.
2022 was a roller coaster, and I think we're still in for a long ride with 2023 ahead of us. Many would say the exuberance of 2021 needed a correction, and that came with a bit of a jarring surprise to some, but also met the expectations of others. It was, in many ways, a long time coming. But I still think we're just at the precipice of understanding what the impact will be on valuations across stages, and certainly for us, it's an area where we think there's a real exciting opportunity to continue being bullish on long-term opportunities.
I am going to let Caroline have all the fun, and I'm going to ask you a slightly dull question about economics, if you would allow me to.
Sure.
It's never dull, Ed.
Well, I know it's important. The funny thing is that if you're I'm assuming if you're a venture capitalist, you assess a broad range of data just as a public market analyst would or investor. Inflation and the Fed, every day for us, inflation and the Fed.
Yep.
What does it mean to you at this stage in the cycle?
Well, we're VCs, so we're long-term investors. We're not day traders. Obviously, there's no denying the impact of the macro on the micro, and we've seen that very clearly in terms of the opportunities for exits for venture-backed companies. But when we're investing in deep technologies, companies that we believe are market makers, we have to look with a longer perspective. And so, 2023 does not look particularly promising, although none of us are Nostradamus, but we're looking ahead 5 to 10 years from now, and those opportunities are very exciting to be investing in the early days.
Dina, you've just made general partner, congratulations. And you focus a lot in the health space in particular, very much focused on female-focused businesses too. What is that more recession-proof than other areas? Healthcare, many have turned to in the public market saying, look, this is one to be investing into at the moment with higher interest rates and with a slower growth prospect. What do you see in terms of the smaller, now growing industries?
Absolutely. I mean, I've often said that health and digital health is recession-proof. Now, that's not to say that it's immune to the macro conditions. That's definitely not the case. In any look at the public markets, no matter how well they're faring, respectively, it's very clear that they're not. That being said, people will continue to get sick. They will continue to have babies. We will continue to have needs for therapeutics and for intervention and care, perhaps more so in the future even than we do today. And I think as a result, what we're seeing is really expanded interest and also a bit of a slightly better opportunity than you're seeing, certainly not just on the public side. PitchBook, I think just yesterday, published a report showing that the median deal valuations for venture-backed healthcare companies is actually up 33% year over year, which is a really interesting take vis-a-vis where the rest of the market seemed to be sitting. One of our companies was on your show just a few weeks ago for their Series E, and that was a really exciting one in women's health where there's a lot of continued interest.
Yeah, shout out to Maven Clinic, and we were so pleased to be able to start the new show with Ed and I, with Kate joining the show in that respect to bring us that Series E. But I'm going to ask a sensitive question now, Dina, and I know because you don't want to shy away from these sorts of things. Lux Capital, of course, has been embroiled in the FTX situation. You wrote checks, not you personally, of course, and therefore I'm not going to ask you about your own due diligence in the space, but what do you think internally the lessons you've learned are when you're looking at writing checks in a more difficult environment that we currently are? How are you looking for companies to be building their corporate governance, to be ensuring that they're giving you all the accounts that you need and the growth story is really there?
You know, I think this is something that's not necessarily just unique to that situation. There are other cases across healthcare in the recent months and years that have also really put a lens on the importance of due diligence. And so there's no doubt that that continues to be very important across the board. And I think perhaps some of the slowdown that we're anticipating in terms of the exuberance of 2021 vis-a-vis what we're expecting in 2023 will give all investors more time and more space to be able to do that, which, you know, is certainly a positive thing.
Dina Shekhar, of course, of Lux Capital, speaking with both Ed Ludlow and I a couple of weeks ago, and very pleased to now welcome Ed Ludlow, who is still out there in London at the moment as we speak, in the heady days of in between what we call Boxing Day over there and New Year.
Yes,
Ed,
right.
lovely to have some time with you. Fascinating conversation, all things private markets there with Dina, but let's talk public markets, and particularly as I'm looking at the NASDAQ 100 at the lowest since November the 4th, as we're seeing, once again, some of these Chinese names. What are you looking at in technology that's selling off today?
Well, I think what's interesting is, you know, we flashed the headline on the Bloomberg that this is the lowest level on the NASDAQ 100 since November 4th, which is my birthday, by the way. But November 3rd, crucial day, November 3rd, 24 hours previous, you just bring up a one-year chart or a year-to-date chart. That was our low for the year. And so, you know, ever since that Fed meeting a week ago, we've kind of reassessed our direction of travel. The market still clearly doesn't agree with either timing or long-term projections for rates, right? There was this idea that a 5.1% rate by year-end 23, sorry, and then we would cut down to 4.6 in 23. The market just didn't see that coming. It kind of caught them by surprise. And we go back to the basics, that higher rates discount the present value of future profits, particularly for tech. What's kind of creeped in the last 24 hours, I'm sure you guys have been talking about it a lot, is China. You know, a lot going on with China, that actually reopening's great, but the spread of this virus is so significant that there's doubt that that actually will refire the economy as intended.
Yeah, so it's interesting. We're going to continue to see stories, I think, probably over the next several days, as other nations around China and just around the world figure out how they're going to deal with a reopened China. Is there an expectation that it will be net positive to GDP growth? I would have to think it'd be somewhat net positive in 23.
Well, I think what's funny is that actually, you know, the reopening of the Chinese economy, the easing of COVID zero policy was basically done in order to induce demand, but also ease up supply constrictions on the companies that operate in those markets. Now, if you read the Bloomberg terminal, there's a report, for example, on Apple on the Bloomberg terminal today, that there's labor concerns because Apple will find its workforce getting sick and therefore not able to operate that Foxconn facility. And as a consequence, one forecaster has downgraded TrendForce their shipments for the full year because that final 3 months of the year, they think there won't be enough workers to make the iPhones. There's an irony there because the demand picture was weak anyway. But it also goes, you know, back to this idea that it's the lesser of two evils, or you basically want to give freedom on policy that's been restrictive. I think most of the market is actually concerned that it's going to slow down the economy because of the spreadness of sickness.
Apple, once again, weighing the most on the S&P in terms of points.
As it usually does.
Drag lower by 6 points. Ed, love having you on. Thank you for spelling out what is still a very cautious market, particularly after that headline about how many people have COVID on certain transatlantic flights. From New York, we thank you. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist. And I think we are witnessing right now a societal change in the way we work. You're no longer going to measure productivity in the same way as in the past. You're going to be focusing on outputs. Never mind what people do in their private times. It doesn't really matter to a company as long as the output is there.
HPE launched its Edge to Office hybrid work initiative in the fall of 2020. The new campus is designed with that flexible model in mind.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Part of what I love about business is you get to build things from nothing.
I don't have any investors. All this is all money in. This is me just building it.
It's pretty much full-service shadow banking with nobody in charge.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
From the world of politics to the world of business, this is Balance of Power with David Weston. From Bloomberg World Headquarters in New York to our television and radio audiences worldwide, welcome to Balance of Power. Well, a big story in the United States continues to be travel or lack thereof for far too many people, and particularly when it comes to Southwest Airlines. Earlier today, we heard from Southwest Airlines CEO Bob Jordan, who had to apologize about it.
I want everyone who is dealing with the problems we've been facing, whether you haven't been able to get to where you need to go, or you're one of our heroic employees caught up in a massive effort to stabilize the airline, to know is that we're doing everything we can to return to a normal operation. And please also hear that I'm truly sorry.
Deeply sorry, but that's not getting people where they want to go. We welcome now Ryan Bean, who has been covering this story for Bloomberg. Ryan, great to have you with us. Thank you for being here. So what is the problem? Because it is Southwest more than others. I mean, weather affected presumably all the airlines equally.
No, absolutely. I mean, to be clear, when the winter storms blanketed the entire U.S., every airline was affected. But it's still only Southwest that is canceling thousands of flights a day, and that's going to continue for several days. I mean, one thing to keep in mind that sort of differentiates Southwest from some of the other bigger carriers like American and Delta is they operate a more of a point-to-point system rather than the so-called hub-and-spoke model. So a disruption in one place can have broad ripple effects. And they're clearly they haven't recovered yet. Their systems were just simply overwhelmed.
Well, how much of that was actually managing it to too close a tolerance? That is to say, really managing the margins, trying to get them up by not spending too much money?
I think there's definitely something to that. I mean, Bob Jordan has said, in that same apology video, he essentially said that the system needs to keep operating. They need to keep moving their planes, keep moving their people, even when they're not flying customers, so that the system system to work properly. And when they can't do that, as we've seen over the past week, it simply breaks down.
So when you talk about hub and spoke versus point to point, I think I kind of understand what that means, but that sounds like something that'll take a while to change, if in fact they're going to change to hub and spoke.
Oh, I don't think they're going to try to change the hub and spoke necessarily, but it is going to take them a while to get sort of back on track. I mean, Bob Jordan has said that they're optimistic that they get back on track before next week. We shall see. They've already canceled more than half of their flights for Thursday. Cancellations for Friday is very, very minimal so far. Only officially canceled a few dozen, but yesterday the Thursday cancellations were only 20%. Now they're over 50. So. We'll see. You got a lot of people out there who are really unhappy. Just watch your local news, and everybody has these man on the street, as we call them, interviews. This has got to damage the brand some, doesn't it? Doesn't this hurt their bottom line over the longer period of time? Well, there's definitely lots of very, very upset, angry passengers who have, missed Christmas and holiday celebrations with their family. They have bags stranded all over the country. They can't locate them. Sometimes with important cargo inside those bags, like medications and whatnot. So yeah, I think they definitely run a risk of damaging their brand. But then again, I've covered companies for a long time, and in past crises, brands tend to recover over time. And with airlines, if the price is right, if the airline can fly to the location that the customers want, and especially if they have like a loyalty program or frequent flyer miles, we'll see. We'll see. But I mean, I certainly can't recall a sort of corporate meltdown that has affected so many people in this way in quite a while. Mainly, we want all those people to get home at some point. Yeah. Thank you so much to Ryan Bean, who covers this story of Southwest Airlines for Bloomberg. Well, there's not only problems with travel in the United States, there are also problems in the United Kingdom, although from a very different source. It's not the weather, as I understand so much. It's rather those industrial actions, we might call them strikes here. And to bring us up to speed on what's going on with the travel system and the economy more broadly in the United Kingdom, we turn to Sir Peter Westmacott. He's chair of TKO Capital UK. Over his career in the British Foreign Service, Sir Peter served as ambassador to the United States, France, and Turkey, which he has written about in his book, They Call It Diplomacy, 40 Years of Representing Britain Abroad. So give us a sense, Sir Peter, of exactly what the situation is in Britain. We hear some pretty dire stories. In fact, we actually heard today from Mr. Sunak that it really could cause major disruptions.
Well, David, good to be with you again, and thanks for giving me the chance to talk. I think in the UK, it's not about seriously bad weather. It's much more to do with strike action, and we've got a lot of critical sectors where people have just decided that they've had enough and they want a proper pay rise. We have 10% inflation, and an awful lot of the salaried middle classes and less well-paid people have had stagnant income since the global financial crisis of 2008. And while interest rates were low and inflation was low, people could just about live with that. But now all those things are changing, and people are saying that's not enough. So we've got ambulance drivers, nurses, railway workers, baggage handlers, immigration control officers at the airport. We've got a whole lot of different people who are now saying that they want a better pay deal, please. And the government at the moment is saying either it's not our responsibility to negotiate pay deals, or it's saying we have to hold firm because the country can't afford, after all the money we've had to shell out in dealing with everything from COVID to pension funds, which we're getting into difficulty. This is not the moment to allow pay increases that the country can't afford. So there's a standoff at the moment, and the result is that over the very difficult Christmas holiday period, an awful lot of people's travel plans have been seriously disrupted.
Sir Peter, if we go back a few years, there were representations made, I believe, that in fact the British economy would be stronger, be able to deal with things like this better if it just came out of the European Union. I wonder if people are starting to have second thoughts about that.
Well, I think you wonder right, David. Some of us who thought that leaving the European Union, and particularly the single market and the customs union, was not a good idea for the United Kingdom, we got shouted down by those people and sometimes interrupted on live radio and television. By people who said, you're just thinking about the economy, what about sovereignty, what about asserting our control and not being ruled by unelected officials in Brussels, and all that sort of stuff. And why should we accept regulation set by the European institutions? Well, they did not really promise a more prosperous existence, though some people did. The Brexit advocates said there will be no loss of economic prosperity, prices of food and everything else will come down, we'll be just as well off, if not better, in the future. But the real problem, I think, is that back in the days of the 2016 referendum, the economic issues that some of us highlighted were not given sufficient attention. It was about politics, it was about sovereignty, and it was about keeping the Conservative Party of the United Kingdom united. That was the forlorn hope of Prime Minister David Cameron. But fast forward now 6 years, David, and what we've got is public opinion which was 52-48 in favor of leaving the European Union in that referendum is now something like 56-44, thinking it was not such a good idea and that it isn't worth the price and that many of the promised benefits simply are not there. And that is, of course, true. Small businesses, exporters, the hospitality sector, anyone in the services industry who needs the manpower that came from having freedom of labor with the rest of the European Union is finding it really, really hard to find the skilled manpower that they need to make things function. And so trade is down, employment is tight, salaries are having to rise. It is a problem. And I think that there's a growing realization that people were, I don't want to show my own prejudice, that they were sold a pup with the idea that the country was going to do better outside the European Union rather than staying inside it.
Sir Peter, one of the biggest stories perhaps of 2022 was that invasion by Russia of Ukraine, something you and I have talked about in the past. And I also think it may have been one of the biggest surprises to many people at how well the Ukrainians have done so far. Bring us up to speed right now on the British attitude toward Ukraine. To some extent, some people are now talking about maybe we should start talking about peace. Is there a desire on the British people's part, do you believe, to get to the peace table?
Well, it's a great question. I think in the UK, just as in many of the other chancelleries, as we call them, of the big Western capitals, the expectation, especially amongst the military experts, was that the Ukrainians would collapse in 3 or 4 days, that Putin would occupy Kyiv in no time at all, and that we would be reduced to trying to support a few kind of resistance movements in the hills, doing a rearguard action. And there was some reluctance to get involved with supporting the Ukrainians at all, even though the UK had done a lot of military training for the Ukrainian armed forces for the previous 8 years, really, since 2014, and the invasion of eastern Ukraine. Now, none of that happened. The Ukrainians turned out to defy all expectations. I think they did much better than expected. The Russian army did much worse than expected, even though the aggression was greater than a lot of friends of Mr. Putin in the West thought it would be. And so there is now, as we know, a very painful, ghastly, in terms of human loss of life, but nevertheless strategically important, standoff between the two. Putin is not winning. The Ukrainians are standing up for themselves very well. Now, the United States is by far the biggest donor in terms of military and economic assistance to Ukraine. But in the United Kingdom also, one of the things that Boris Johnson got credit for, I think rightly, was moving very fast when the invasion took place in late February to say that the United Kingdom would be supporting President Zelensky and the Ukrainian people as they fought back against the illegal and unsolicited and unprovoked Russian invasion. So we've been very firm in the UK. Other European countries, I would say, a bit slower off the mark. We're by quite a long way the second biggest donor of military and economic assistance after the United States, although the European Union collectively has provided a lot of economic and humanitarian assistance. I don't detect any wobble, any sense of Ukraine fatigue in the UK at the moment. And those of us who try to understand a bit of what's going on are saying, look, at a time when Putin wants to stand back for a few months, retrain, re-equip, rearm, and prepare a further offensive, this is not the moment to wobble in terms of the support we give to Ukraine, because otherwise the risk is that Putin will think he can win and that this war will go on for even longer. I think we're also aware that with the Republicans taking over the House in Washington, David, that the very powerful message of support, the $47 billion of further assistance just voted through by the United States Congress, might not necessarily be there in a year's time when you've got different leadership in the House of Representatives. So this is the time that those of us who care about freedom and values and the sovereignty of Ukraine, and by the way, let's remember that Ukrainians are fighting this war so the rest of us in NATO don't have to, this is not the time to weaken our support. I think public opinion is there. It's bipartisan in the UK. It's fairly bipartisan as far as I can see in the United States, although clearly there are some Republican leaders who don't want to carry on giving much support to Ukraine. But I think I'll be a mistake.
Sir Peter, it's always such a pleasure to have you, and we wish you the happiest of New Year's, by the way. Sir Peter Westmacott, TKO. Thank you so much. Now, keeping up to date with news from all around the world, we turn now to Madison Mills here with the first word. Madison?
Thanks, David. Stranded travelers in the U.S. could face days of waiting to get to their destinations. That is if they're booked on Southwest Airlines. That carrier already scrapping 60% of its flights today and about 58% of flights for tomorrow.
I want everyone who is dealing with the problems we've been facing, whether you haven't been able to get to where you need to go, or you're one of our heroic employees caught up in a massive effort to stabilize the airline, to know is that we're doing everything we can to return to a normal operation. And please also hear that I'm truly sorry.
Southwest shares down by just over 2% today after falling 6% on Tuesday. And the Vatican says the retired Pope Benedict's health is getting worse. And that Pope Francis has gone to visit him. No word yet on what that illness is. Benedict is 95 and served as head of the Roman Catholic Church for almost 8 years. In 2013, he became the first pope in 600 years to step down. And China abandoning its COVID-0 policy as cases soar. Now other countries considering whether to test or limit travelers from China. Both the U.S. and Japan are weighing new restrictions on people arriving from that country, with Italy already ordering mandatory testing for passengers from there. Flight bookings out of China surged following Beijing's policy reversal. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Madison Mills. David?
Thanks so much, Madison. Coming up, we're going to talk with the man who's trying to organize Amazon workers. He's Chris Smalls. He's had some success, at least in New York, but also has had some setback. We're going to find out what he's been doing, and this is Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Balance of Power on Bloomberg Television and Radio. I'm David Weston. We want to check in on the markets right now, and for that we turn to Abigail Doolittle. So Abigail, I started out the day thinking we were going to have an up day in equities, and now it doesn't look so much.
You and me both, David. I'm a little bit surprised by this action that we're seeing. Earlier today, it felt like we were going to really have some sort of a rally. There was a decent feeling around it, but it quickly faded. And at this point, we're looking at a 1% decline for the S&P 500. The NASDAQ, that tech-heavy index, down even more, down a 1.25%. One drag is China Tech, down 3.7%, which is interesting as we hear about China reopening, but we're also hearing about all of these COVID cases and even some restrictions that other countries may be placing on China travelers. But net, the volume's really light. Santa, though, right now, David, not coming to town, down about 9/10
Santa Claus, right? Is it real? I mean, if you go back in history, is it real? I mean, it's the 5 days plus 2 or something?
Yeah, it is actually a real event. A lot of times we talk about the big round numbers on the S&P 500, the NASDAQ, more psychological, but this Santa Claus rally is real. As you talked about, it's the last 5 days of a trading year, the first 2 of the next. So when we have a gain, the next year, 18 of 23 times stocks have rallied. When there's a loss, and that has not been very often, so usually Santa does come to town, down 4 out of those 6 years. So if we don't have Santa coming to town sometime soon, we could be looking at another down year, which historically history doesn't support. So we have all these different historical facts.
Well, putting aside Santa Claus for a second, I don't want you to get away without talking about the yield on the 10-year, because it's creeping up there. It's just been slowly building up now. We're up pushing toward 3.9 now.
Yeah, it's interesting you're talking about that, because it has edged higher, not taking a lot of fanfare, because there's actually a very good article on the Bloomberg terminal yesterday about how treasuries have rallied over the last couple of months, which is actually true over the last 2 months, because of course the 10-year yield had been above 4%. But you're right, it is kind of creeping up here, and that's happening right around the world. We have over the last couple of weeks, yields climbing. That could be one reason that the BOJ announced that unannounced bond buying campaign, which is kind of interesting. If I'm reading it right, they're unlimited buying of the 2-year, I think, at 3 bips, of the 5-year, 24 bips, that 10-year at 50 bips. That would sort of seem to go in the face of earlier thinking that they were making that move to tightening. Almost very different than the UK, but some tightening and then some...
Well, that's right. Although in defense of Mr. Crota, he said at the time, I'm not really tightening. I mean, everybody took it as tightening. The markets didn't believe him, but he said at the time, if you go back and look at it, he says, this is not necessarily tightening, guys.
Good point.
So, okay.
Good point.
Abigail, thank you so much for being with us. That's Abigail Doolittle on the market. She'll be back in the next hour with more on that. In the meantime, looking back at 2022, one of the developments I think across the industry, the tech industry, has been something of a move toward organized labor, with some people voting for it, some people not voting for it. And one of the big ones was Amazon. We welcome now someone who was behind one of those organizing efforts that worked in New York in a big warehouse here. He's Chris Smalls, a former Amazon worker whose efforts led to a successful campaign to organize one of Amazon's New York warehouses, and a very big one, I must say. Mr. Smalls, thank you so much for being with us. First of all, bring us up to speed on that effort, because you did get a vote, but you're not at the bargaining table yet, as I understand it.
Yeah, absolutely. We won back in April 1st to become the first union in American history. In Staten Island, we represent 8,300 workers. And right now, we're currently waiting to be certified. We've been in court for the last 5 months. After the board ruled in our favor, they dismissed all of Amazon's claims. We are waiting to be certified, and once we're certified, we're going to order Amazon to come to the table and bargain right away. That is where we stand at currently.
So you're in court because Amazon's claimed that there are certain irregularities. They had a bunch of them, I think they listed. But is that on appeal? Has a judge ruled on that yet? Where are we?
Yeah, so the regional director of that specific case has already ruled that they dismissed all the charges. Right now we're waiting for the actual certification to come through. Once that certification comes through, we'll be able to legally force Amazon to come to the table and bargain with us. So right now, we're just waiting. It's a waiting game. Unfortunately, we know how these processes work. The corporations, they're going to drag these processes out. They know that the NLRB right now is currently underfunded. They know that it's understaffed. And their goal is to drag these processes out as long as possible and try to get the union outside of the warehouse. But we have to engage and continue to advocate and keep the workers engaged.
Yeah, exactly. Keeping the workers engaged. As I understand it, I took labor law 100 years ago or so now, that the obligation is to bargain in good faith for the employer. Doesn't necessarily mean you're getting a contract. You have to bargain in good faith, at least to impasse. Do you have any sense that Amazon might be willing at some point to actually sit down and talk to you?
Well, of course not. They're very anti-union, just like any other corporation in this country, unfortunately. But we do have good expectations because of the way we're organizing. We're not going to continue to rest. We are continue to grow across the country. We have other campaigns that are launching, others that are going to be launching coming in the coming months. And I believe that it's in their best interest for them to come to the table. We as workers, we just want what's best for us. We don't want to shut down the company. We just want to have a fair share in pay We want to have job security. We want to have better benefits, better medical leave options, all the things that Amazon can absolutely afford. You know, we're not asking for much. So we're hoping that in good faith, they do come to the table. This is one of the most prominent companies in history, in modern day history. So it's only in their interest to come to the table and take care of their workers. That's all we're asking for.
I think you answered my next question, which is when you get to the table, what are you going to ask for? I think you just went down a pretty good list of what you'll be negotiating over. But come back to keeping your workers engaged. The people who voted with you, are they staying with you? Are they still enthusiastic about this? Or might they get discouraged because it's taking so long?
Well, honestly, you know, they can be discouraged at certain times, but at the same time, you know, the union is going to continue to provide services. That's all we can do, you know, in the meantime. And keeping workers engaged is always going to be a challenge when you have a corporation spending millions of dollars every single day trying to anti-union bust. And this is what we had to put up against this, unfortunately, as workers at the bottom. You know, we don't have the money to combat with Amazon's anti-union propaganda, but what we can do is provide services. So yes, we're keeping our members engaged as much as we can. We're providing the services that we're able to. Certain protections. We have filed over 100 ULPs, which is unfair labor practices. We have won small victories. We just passed a bill with New York State Jessica Ramos. We're continuing to fight for $30 an hour. That is our campaign demand. We're not fighting for 15 anymore. So we're just going to continue to raise the bar and continue to organize until this company once again comes to the table in good faith.
Mr. Smalls, go beyond the warehouse. And as you say, it's a very large one, over 8,000 employees. It's a big one. But go beyond that to other Amazon locations, because as I understand it, whereas you won that vote, a lot of those votes have gone the other way. Why do you think that is?
Well, once again, you know, Amazon does a great job with union busting. They spend millions of dollars. They spend $4.2 million trying to stop our efforts. They put the workers in over 3,300 captive audiences during our 11-month campaign. So could you imagine walking into Amazon, being hired on your first day, your first week, and you're getting pulled right into an anti-union propaganda class? You know, so the brainwashing is there. The fact that Amazon, lies and demonizes the union. The fact that, once again, we don't have the opportunities to have our own captive audiences as union organizers. We have to continue to combat that. And unfortunately, there's a lot of illegal things that are taking place inside these warehouses as well. This is why we have to continue to fight legally as well.
No, I understand that's your position, and I respect you taking that position. I'm sure Amazon, if they were here, would have a different position. But let me ask you this question. You must agree that Amazon has a right to talk to its workers about what the issues are and present its side of it. Where does that leave off and what you call propaganda pick up? Because certainly you wouldn't say the employer has no right to communicate with the employees at all, would you?
No, it's not about having the right. It's about the misinformation they spread. You know, they lie and say that, the unions are going to speak for the workers, or the union is going to take a whole bunch of dues. They compare this independent worker-led union to, unions of the past. So we don't have the fair say in saying that we're not corrupt. Because Amazon puts out that, we're corrupt, or that I'm a union president that's trying to make X amount of dollars.
Right.
So these type of things are the lies that we have to combat every single day.
Okay.
And unfortunately, because Amazon is open 24/7,
right,
we don't have that access. So we have to fight on the other points.
Mr. Smalls, thank you so very much. Really appreciate your being here. Chris Smalls, Amazon Labor Union founder and president. We have asked Amazon if they want to come on and present their point of view. And this is Bloomberg.
satellites have propulsion systems. They can kind of move to get out of the way of each other or change their orbit a little bit. It's a service that you guys offer to help these companies know how to maneuver their machines.
Yeah, we offer a collision avoidance service. It's a subscription service. We'll send you an alert up to 7 days in advance if your satellite's going to come dangerously close to a piece of debris or another satellite.
Companies have been doing that for decades, moving satellites around, but it's sort of like a harder problem now.
The risk of a collision is a lot higher now, just because we've installed so much more hardware into space. You have a big collision, it creates a cloud of debris, and now all the other satellites are flying through this whizzing mess of debris. As we add all of the new satellites into space, the risks of the collision, the likelihood of the collision is going up.
The top names in business are on Bloomberg.
I think you have to assume that we have some bumpy times ahead, and you have to be a little bit more cautious with your financial resources, with your sizing and the footprint of the organization.
So what can you do near term? Test to make sure you see at the margin you can move things around, manage your expenses very carefully and invest in efficiency and effectiveness, but also continue to spend money where you have competitive advantage.
Nobody covers business like Bloomberg, your global business authority.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. As we talked about at the top of the hour, airlines across the United States were hit by the severe weather over the Christmas holiday, but none so much as Southwest Airlines. Helene Becker of Cowen was on Bloomberg this morning to take us through some of their problems.
Everybody else is pretty much within what I would call their normal course of doing business. The cancellations are relatively low. Southwest accounted for more than 80% of all cancels yesterday, and for them, they're just behind the curve here, and they probably won't get caught up until the weekend at the earliest.
Well, and we have seen modeling from analysts over at Citi that talks about a 3 to 5% earnings hit for the fourth quarter. But I'm wondering what kind of signal this is on the longer term operational health of Southwest beyond just what is ongoing currently. If something like this could happen at this scale for this long, does that just mean they're ill-equipped to handle weather events like this? I mean, what went wrong here that could go wrong again?
Yeah, they had a confluence of a lot of events. So you had the weather, and it moved across country, hitting Denver and Chicago particularly hard. United is in both of those locations, didn't get hit quite as hard, but still impacted. For Southwest, though, I think at Midway, there was a lack of de-icing fluid. Then they had an issue in San Diego with fog. They had ice in Dallas. So everywhere they were, they had weather. And the worst of it is their systems are just not equipped to handle it. Historically, Southwest underinvested in IT, in technology, and this has come back in the past to hurt them. They were investing aggressively this year. That was one of the catalysts we thought, for the shares. Later this year, as the new scheduling system for employees was coming up. But one of the issues we saw yesterday was an aircraft with a bunch of flight attendants deadheading to a city. But the crew working the plane was short a flight attendant. And according to the pilot on board, any one of those other flight attendants offered to work the flight, but they couldn't get through to scheduling to say, hey, we're here, we'll take it. And so Southwest canceled the flight. They're doing what should be automated by hand. When you have 6,000 flights a day, and you probably shouldn't, you should probably have 2/3 of that. It's not that they don't have enough people, it's that they don't know where their people are.
That was Cowen senior research analyst Helene Becker talking with our colleague Haley Lines this morning on Bloomberg Surveillance. That was a perspective from the airline's point of view. We want to now get a perspective from the workers' point of view. You heard just a hint of it there when she was talking about some of the flight attendants. We welcome now Mary Kay Henry. She is International President of the Service Employees International Union. So thank you so much for being with us. Happy holidays to us. I know
Happy holidays to you, David.
You're very much in touch with the workers and a lot of these airlines. Give us your perspective on what's going on in the airlines these days.
Well, I think the analysis shows us that major airlines who received billions in public funds over the past 3 years and are recording record profits are just making decisions for their bottom line as opposed to the passengers trying to get home for the holidays, or the baggage handlers and service workers in airports that are earning poverty wages then can't feed their families. And so that's why we think it's so critical that Congress passes the Good Jobs for Good Airports Act so that we can require airlines to provide living wage jobs for workers all across the system.
So that's exactly where I wanted to go, is what can the federal government do about it? Does it require legislation?
Yes, in the Good Jobs, Good Airports Act sets a minimum standard through the Service Contract Act, just like the prevailing wages that are set for airport construction. We want to apply it to all service jobs across the airlines and hold corporations accountable for the public funds that they receive in creating good jobs in every airport all across the country.
So I'm curious, Mary Kay, because you have such experience with this, why do we need a statute to specify that instead of having collective bargaining that would give it to the employees?
And it used to be that these workers were covered by collective bargaining in the 70s, and then the airlines contracted out 1 million jobs of baggage handlers, cabin cleaners, wheelchair attendants, and all those workers are now in poverty wage jobs that have no paid time off, no health care, no other kind of vacation benefits, except in the airports where we've been able to unionize in the past 10 years 40,000 workers who now have $18 and $20 an hour jobs with health care and pensions. And so what the Service Good Jobs for Good Airports Act would do is create a level playing field for workers all across the country so that if there isn't a baggage handler in Chicago earning 18 with benefits and a baggage handler in Dallas at $8 or $10 an hour with no benefits.
President Biden came in and said he wanted to be the labor president, I believe was his expression. It really was pro-labor. And he certainly has talked a lot about that. Is the Biden administration making a difference from where you sit?
Yeah, one example is that for every federally contracted job, they've required $15 an hour and are saying to employers they should stay out of whether workers want to join together in a union. And so that's one sort of affirmative action that we are trying to now apply to all airport service jobs across the country.
When it comes to organizing, whether it's airline workers or others, is that becoming harder or more difficult? Because one of the things we've seen certainly in the labor market is there are a lot more open jobs and they're applying for those jobs. I would normally think that shifts some of the power, the bargaining power, toward the workers.
Yeah, I'd say 2022, David, was a historic year for working people. And you just talked to President Smalls about the Amazon organizing together with Starbucks workers that have been organizing in spite of a terrible anti-union campaign. We're backing the airport service workers that you and I just discussed. We've backing fast food workers in California who just created a huge bill to get 500,000 workers into collective bargaining through a fast food sector council in California. We're backing Southern workers that want to organize. I think the momentum is growing for workers rejecting the status quo and saying enough of corporate greed. We want to hold corporations accountable and make sure that every worker who works hard for a living is able to provide for their families.
So with the existing labor laws as they are now, and the NLRB as it's constituted now, plus some of the market dynamics that you just described, is that enough to get the job done? Because some people have said we actually need to reform or revise the labor laws.
Yes, we do. The current labor law was written in the 30s. It excluded a lot of Black, brown, and women worker jobs because of a compromise with Southern Democrats at the time that was racist and sexist fundamentally. So those laws are outdated and they only cover 46% of the existing workforce because of contracting out, because of franchising, because of the fissured workplace, gig workers. None of those workers have a legal right to organize in this economy, and that's why we're demanding unions for all workers, either by getting our government to rewrite the rules or getting major corporations like Amazon and Starbucks to come to their senses and create a seat at the table for their frontline workforce and actually demonstrate that we do view these workers as essential to our economy and that they should have a full voice on the job.
You said a lot of the labor laws were written back in the 30s, a very different time. And I must say, I'm from Flint, Michigan. My father belonged to the UAW. My grandfather did as well. It was a different world back then. You went to work for one company and you had one job there, and often you spent your entire career doing it. Do those rules still apply today? Because I'm just not sure exactly how organized labor works in what you call the gig economy, where a lot of people have more than one job and they move often from company to company.
Yes. I mean, some workers are trying to organize within the rig system because they reject the status quo and are going to do whatever they can, like the Amazon workers in Staten Island use the NLRB. The Starbucks workers are using the NLRB. The fast food workers are trying to demand from government to rewrite the rules. And the airport service workers are going to Congress and saying, we need the federal government to intervene with these major airlines. So we think we have to use an all of the above strategy, work within the current broken system and organize to reform the system so it works for every worker, including those gig workers.
Given the importance that you attach to possible statutory revision, how big a difference is it likely to make that the Republicans have a majority, albeit a narrow one, in the new Congress?
Well, when you look at Nebraska, voters overwhelmingly said they wanted a $15 an hour minimum wage. And so I think Republicans and Democrats alike have to understand that growing economic and racial inequality is bad for our economy and bad for our democracy. And that if they're going to represent their constituents, they need to pay attention to the historic uprising of working people who are demanding change, either at the ballot box or in their workplace or through their state legislatures.
So, Mary Kay, you say that 2022 was quite a year for labor in this country. What are you looking forward to in 2023? Or a different way to put it is, you listed quite a few things you're trying to do. What's your top priority?
Well, I would say we want to back the momentum of working people who are rejecting the status quo and saying enough is enough. We deserve better. We were called essential during the pandemic. We want our employers and government to recognize the essential work we do and respect us, protect us, and pay us. And so we're going to back workers in California trying to set this table as the fast food companies are going to pour millions of dollars against getting that law overturned. And we are going to fight to make sure this law gets implemented. We're going to back the service workers in the South who are saying they want to join together across race and geography to create a better life in the South. And wherever workers want to join together in a union and bargain a better life, we're going to be there to back them.
Last one, Mary Kay, if I may. Is there a demographic element to who really is enthusiastic about organized labor? Are older people tend to be more inclined toward it?
Well, you know, the poll shows that young people under 30 are the highest supporters of unions. And that's what we're experiencing all across our organizing as well. And that Black, brown, immigrant, and Asian workers who are disproportionately forced into and tracked into minimum wage jobs also understand that they have power when they join together across race and geography.
That's really interesting. Thank you so much for being here. It was very informative. It's Mary Kay Henry. She's International President of the Service Employees International Union. Now, to keep you up to date with news from all around the world, we turn to Madison Mills here with the first word.
Thanks, David. Over in Michigan, a militia member who plotted to kidnap Governor Gretchen Whitmer, he's been sentenced to 19 years in prison. Barry Croft Jr. was sentenced a day after another plotter, Adam Fox, received a 16-year term. Prosecutors say the men's goal was to start a civil war. 14 people were arrested in that kidnapping plot. And signs of weakness in the U.S. real estate market. Pending home sales fell for a 6th month in November to their second lowest on record. The 4% decline was worse than all estimates in a Bloomberg survey. Higher borrowing costs and an uncertain economic outlook are keeping many potential buyers on the sidelines. Over in the UK, a spokesman for Prime Minister Rishi Sunak acknowledges that nationwide strikes are causing massive disruption. Railway staff and Border Force workers went on strike today. Meanwhile, nurses and ambulance workers plan further walkouts in January after striking earlier this month. Sunak is opposed to granting large pay hikes that he says could boost inflation. All of this comes as air travel roars back globally. The problem? There aren't enough airplanes. Jefferies estimates there is an order backlog approaching 13,000 airlines. Boeing and Airbus are sold out for their most popular single-aisle models through 2029. The result, airlines have fewer seats to sell, which means higher fares for us. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Madison Mills. David?
Thank you so much, Madison. Well, next we're going to turn to perhaps the biggest story really that happened yesterday. The Supreme Court weighed in on the question of immigration as it suspended the change in that Title 42, saying that in fact President Biden could not waive it to let people in without first screening them. So we're going to talk about what the politics of all that are with our political contributors Jeannie Shanzano and Rick Davis. That's coming up next right here on Bloomberg on Balance of Power.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that's attracted billions of dollars in capital in recent years.
Governments and private investors alike realise that we've got to find a solution that's going to allow us to get to net zero targets.
This is one of the hardest but most rewarding problems that humanity could work on. Ultimately, we all want the same thing. We want someone to put electricity on the grid from a fusion power station as quickly as possible.
Frankly, the scale of the challenge, 3,000 gigawatts of fossil fuel to replace, there's not many things that can do that. In fact, there may only be fusion that can really do that.
And while many in the scientific community predict fusion power will take decades, some in the private fusion space believe we'll get there in just a few years, as soon as the 2030s.
No one covers the world like Bloomberg.
My team thinks 2023, we avoid a recession. I'm a little more skeptical about that.
China and the U.S. both do not want to see nuclear force on the European continent.
The regulators here in the Bahamas are ongoing with their investigation into FTX.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority. When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg.
This is Balance of Power on Bloomberg Television and Radio. I'm David Weston. Well, the Supreme Court weighed in yesterday, staying a Biden administration move away from that Title 42 requirement that said that actually they had to let people into the country, and now they're going to have to keep them out, at least for the time being, until the Supreme Court decides what to do. To take us through the politics of this, not so much the law, but the politics, we welcome Bloomberg political contributors Rick Davis of Stone Court Capital and Jeannie Shanzano of Iona University. So, Jeannie, I'm going to start with you, actually. What are the politics of this from Joe Biden's point of view? And by the way, is it possible this sort of let him off the hook?
It's very possible. I saw this as a gift from the Supreme Court and the conservatives on the court to Joe Biden and the Biden administration, because, of course, had they agreed to lift Title 42, they were facing an even larger influx of migrants on the border. And as we've heard from El Paso and all the border states, they are not prepared to handle that. So while I don't expect we'll hear that publicly from the administration, this does buy them a little bit of time to see if they can get some kind of policy in place, be it by February or whenever the court decides to rule, that they can then be in a position to address the migrants coming over the border. Because, of course, under Title 42, 2.5 million migrants have been expelled, much to the dismay of immigrant rights groups. But, of course, the Biden administration has to address the security issues as well.
So, Rick, maybe a little temporary respite here, but sooner or later they're going to have to address the underlying issue, right? It doesn't look like these immigrants are going to go away. By the way, just as soon as we decide where they're coming from, they come from a different point. They're coming from places like Colombia now.
That's right. These two issues you just mentioned were brought out in Justice Gorsuch, who actually voted against the majority on this one, and was a bit of a surprise. But he said, look, there's no doubt there's a crisis on the border, but this is not the way to fix it. This is a COVID-era policy that has to do with public health. It's got nothing to do with border security and or the use of the law to manage these immigrants. And part of what's been happening is the repatriations of people back to their home countries because of Title 42 has really trailed off. I mean, many of the Venezuelans, we can't get them back into Venezuela. The Cubans, we have a policy not to be making flights into Cuba. So we're not even able to get them out of our country. Mexico's made it very clear they don't belong in Mexico. And so they're kind of stuck in this lack of policy. And I think the message that Gorsuch was telling us was, hey, why doesn't Congress and the administration get together and find a public policy route to solve this? Because there's not a legal route to solve it.
So Rick, I'm going to pick on you because your old boss, John McCain, the senator, former presidential candidate, really cared about this immigration issue a lot. Now, it's different today than it was then. But if, in fact, Congress, under John McCain, were going to fix this, what would John McCain have done?
Well, he would have had a comprehensive approach, because the problem with immigration politics is there's no one fix, right? Not everybody is just going to build the border wall, right, and lock down the border. That was the Trump era strategy that didn't work. And not everybody wants to allow there to be a guest worker program without more security. So what you've got to do, and then there's the dreamers and other issues. And so what you have to do is you have to bundle all these fixes into one comprehensive bill where you can find people who support each and every one of them, and together they're a majority. Together they can actually beat a filibuster in the Senate. And so that's the only way he felt you could actually legitimately tackle it. And frankly, all these fixes need to occur in order for us to have a legitimately good immigration policy. And that's exactly what I think John McCain would have been fighting for today.
And just to follow up on that, I don't ever say I agree with Neil Gorsuch, maybe a couple times, but I agree with his dissent joined by Ketanji Brown Jackson. He said, exactly as Rick said, that this is the role of Congress. The problem is there is zero incentive for the 118th Congress to address this before the 24 election. So we will not see it happen. You can go right back to the election of George W. Bush. He couldn't beat get the votes he needed to beat cloture in 2007. He dropped it, followed by Obama, followed by Trump, and now Joe Biden. Nobody has been able to get this through Congress. We saw Kristen Sinema, Tom Tillis come up with a proposal, limited as it was in the lame duck. They couldn't make any headway on that. So the problem is, as we see so often in this country with Congress is not incentivized to address this crisis. And so they're trying to hide under a public health measure to address an immigration crisis. And unfortunately, that's not going to happen, and it's not what should happen. This should be addressed in Congress. There are policies in place to do that, but very little political will to follow through. And I would say, particularly on the Republican side, where they see this as a winning strategy to hit the Biden administration and Kamala Harris over the head for not having an immigration policy. There is a crisis in this country in immigration, no question, but it's going to take both parties to solve it, and that's not going to happen in this Congress.
Rick, as you know, here at Bloomberg, we talk from time to time about market failures in the markets. Is there a political market failure here? Because picking up on what Jeannie just said, I have a friend who handled elected office, who's a pretty smart guy, who says that basically elected representatives have one goal, which is get reelected. Is there anybody you think is going to help them get reelected to address this issue?
Yeah, there is no profiling courage on this issue in the current Congress. And maybe one of the things that they could consider and the administration could play along with is an eminent commission that could actually put together a deal, put together a policy that's actually good for America, and actually do an up or down vote on that policy, right? We used to do this quite a bit in politics, is we'd get an eminent commission, they'd work really hard, they'd do the right public policy, and then you just vote on it and make it a bill. And I think in this case, maybe that's one of the options that a Congress that lacks courage can actually be for.
Yeah, it's a good point. I think it was done with Social Security and done with base closures, both, right, years ago. to avoid this very problem. So let's talk about your party here, Rick, the Republican Party, which is having a little bit of tussle at the top. Ronna McDaniel is trying to get reelected, and she's being opposed, evidently because she's not conservative enough, which came as a little bit of a surprise to me, at least.
Yeah, I mean, this one's pretty amazing because just at a time when her track record could not look more dismal, there are a couple of candidates, including MyPillow CEO, who make it look even worse. I mean, they have no political experience. They don't really bring any particular fundraising capability to the table. And so she's pressured to address the concerns that they have over the fact that she hasn't been adherent enough to Donald Trump, which is a shock to most. Look, she's got a lot of support within the National Committee. This National Committee, over her 4 terms, has basically changed to be people that she knows and likes her. So it's still going to take a big rock to move this committee away from Ronna McDaniel. But the longer this goes, the worse it's going to look for her because obviously there's been a lot of campaigns to discredit her, and that's not ending today.
Yeah, and you know, the Republicans having an awful lot of difficulty choosing leaders from the speaker to the head of the Republican Party. And, you know, the reality for Ronna McDaniel is that she has been presiding over a party that has not been performing well. And so they should be taking a second look at her, and they should be focusing on putting somebody in place who could have a winning strategy for the party. But the problem is, I think of it sort of like choosing the prime minister in England. She just has to appeal to that committee. She gets enough of those votes, they will keep her in. The problem is she's going to lose moderates and independents on the ground. And so for the Republican Party as a whole, it puts them in a position that is not very healthy as they go into 24. And the real fear for many moderate Republicans is that she is beholden to Donald Trump and has been for some time. And so they see her as sort of a danger in that respect. And I'll tell you from the Democrats' perspective, the more Donald Trump, the more Ronna McDaniel in place, the better they feel about somebody like Joe Biden's chances in 24.
At the same time, Jeannie, I mean, you're a political science professor, and George Washington was concerned the parties would get too powerful. Are they powerful enough right now? Because we can say what we want about the Republican Party. Look at what the Democratic Party did in the state of New York in the congressional election.
That's right. You know, in my view, they are not powerful enough. The problem is they are too weak. The leadership is too weak. In Congress, we are seeing that. You've got on the Republican side a, you know, potential speaker who can't garner the votes. It's very difficult to control these caucuses. And in a democracy like ours that's so separated, you need strong parties in order to surmount all of the divisions in government and do things like pass comprehensive immigration reform, pass campaign finance reform. Without that, we all suffer. And so we need 2 strong political parties that are healthy. We don't have that on either side in this point.
Rick, what say you? Do the parties need to get stronger?
Yeah, the parties are weak, partly because of the changes in campaign finance that my boss, my old boss, John McCain, was party to. We took a lot of the money out of the committees. The problem is it went other places that are less transparent, and we're seeing the negative effects of those black money operations all around. I think a combination of new campaign finance reform so that parties can do their job with the funds that are available.
Rick, thank you so much. That's Rick Davis of Stone Court Capital and Jeannie Shanzano of Iona University. Thank you so much for being with us. Check out the Balance of Power newsletter on the terminal and online. Coming, we're going to have a second hour Balance of Power. Stay tuned. And this is Bloomberg.
McDonald's is more than 60 years old now. What is it that made McDonald's by far the biggest of the fast food companies?
I think it starts with the brand. I mean, we have a brand that is one of the most valuable brands in the world. It started with Ray Kroc recognized the importance of ubiquity. And so that was part of the genius or genesis of doing a franchise model, because with a franchise model, he could get capital deployed, get restaurants built more quickly than he could if he was trying to do this all on his own.
There's been a greater interest in the United States and maybe around the world in healthier eating. Yeah. Have you tried to reflect that in your menu?
I'd say, you know, what we try to do on our menu is to have choice. So we have a variety of things on our menu, from more indulgent items to, you know, healthier items. And, you know, it gets back to, again, what sells gets on the menu and stays on the menu. What we have seen consistently is, as we've tried to broaden more of what, people might say are better for you items, there's just not as strong a demand for them as there are for some of our iconic classics. And so, we're not in the business of telling people what they should or shouldn't eat. Our view is our obligation is to provide them with total transparency on nutritional information to make sure that we afford them choice, but ultimately what the consumer buys is up to them.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close.
Welcome to Bloomberg Crypto.
From the world of politics to the world of business, this is Balance of Power with David Weston.
Bloomberg World Headquarters in New York to our television and radio audiences worldwide. Welcome to Balance of Power. One of the biggest stories of 2022 will likely be one of the biggest ones of 2023 as well. That's that Russian invasion of Ukraine and what the West, the U.S. and NATO have done to try to support Ukraine, and particularly what Ukraine has done to resist that invasion. We heard from President Zelensky, and he said that he thanked the United States for all the support being given, but also he's going to need more. To bring us up to speed on where that stands as we go into a new Congress next week, we welcome Bloomberg's Senate reporter Steve Dennis. Steve, thanks so much for being with us. We heard President Zelensky make the pitch. Is it going to fall on receptive ears when we have a majority of Republicans in the House?
Yeah, so I was in the chamber for his speech. I was in the front row, and I was spending all of my time looking at the Republicans in Congress. And one of the things that really kind of put to rest is the idea that they're just going to walk away. You saw again and again and again Kevin McCarthy, Steve Scalise, the other Republican leaders, and almost all of the rank and file stand up for numerous standing ovations. There were maybe 5 or 10 House Republicans who are sort of checking their phones and sitting on their hands, but most of them haven't been voting for Ukraine aid up until now. But there is this split that Kevin McCarthy is going to have to deal with if he becomes Speaker next week. He does not have 218 Republicans who support Ukraine. He's going to have to work with Democrats on that. And that's a tough road for any Republican Speaker to have to go ask for Democratic votes. And, he already faces this group of 5 recalcitrant, revolutionary Republicans who are trying to prevent him from becoming speaker.
One of the things, Stephen, we've heard from Republican lawmakers is, I'm for supporting Ukraine, but I want to know better where the money's going. In fact, I might want to go back and audit what's been done so far. Is that a real distinction, that is to say that we could fully support them and yet just be more careful in counting the dollars?
Yeah, I mean, they always talk about that, and Kevin McCarthy is saying that they're not going to get a blank check from the new Congress. But, you know, the reality is it's really hard to go in and audit when we are basically handing them weapons and leaving. We aren't keeping soldiers on the ground. We aren't keeping a bunch of State Department auditors on the front lines. And so, you know, the war is messy. I think there will be auditing type legislation pass, but I think that it's going to be very hard to really get your arms around it. I think in Ukraine's favor is they're putting the weapons and the money to some success. They have taken back so much territory. They've destroyed so many Russian forces. You know, you occasionally will hear lawmakers talk about this basically being a cheap investment for the United States. We spend over $800 billion a year on the military. A lot of that is to counter Russia. And, you know, the package that's, you know, the Congress just passed is another $45 billion or so, bringing our total over $100 billion about. Right. But, you know, that's still a small amount of our military budget. And when you think about all of the economic impacts of this war, it's actually pretty small. I mean, the bigger impacts of the war on food prices and energy prices and all the other things you see on the terminal.
Great. Thank you so much. I really appreciate it, Steve. That's Steve Dennis, who reports on the Senate for Bloomberg. Now we turn to someone who is a true expert in Europe and European-U.S. relations. Constance Stelzenmüller is Brookings Institution's Senior Fellow and Director of the Center on the United States and Europe. So welcome back. It's great to have you with us. Give us your best perspective. I know I read your piece in the Financial Times in which I took away that we need to actually, if anything, double down on Ukraine. We may not have gone far enough.
Well, thank you very much for citing that, and thanks for having me back on again. Happy holidays. Yes, the point I made in that column was that I think we have a choice right now of hanging back, and I sense there are elements not just in Europe but also in the U.S. government, or of going all in. And I think the choice there, as I said, as I put it in my column, is really between helping Ukraine succeed and having not one but two failed states to Europe's east. Russia, I think, is going to become a failed state if Russia continues on this path under Vladimir Putin. And if we don't help Ukraine succeed, it will also become a failed state.
So let's be specific if we could, as I understand it, and this is largely from your column. There are three specific things I think we're talking about, which is fixed-wing aircraft, long-range missiles, as well as more sophisticated tanks. Are those the three things that we could do that you think could make a fundamental difference in what happens in this war?
Well, I think the crucial thing right now is air defenses. That would mean long-range missiles like ATACMS. Certainly the Patriots that the administration decided last week to send will make an immense difference, although they do require some time to train users on, because the Russians are waging this merciless war of attrition with the help of drones and ballistic missiles, long-range missiles shot from airplanes from within Russian territory, against Ukrainian cities and civilian infrastructure, risking a really massive humanitarian crisis and possibly even another major refugee outflow.
It seems to me, I'm trying to read...
Yes, I would add tax to that, if I may say, yes.
Yes, but just trying to read the tea leaves here, it appears that certainly President Zelensky says, give us all of those things, and let's do it now rather than doing it piecemeal the way we've done to some extent. For example, the Patriots, we said for the longest time we wouldn't do, and now we're doing it. At the same time, we hear, for example, from the Secretary of State, Antony Blinken, and sometimes it sounds like he's saying, no, we don't want to go all the way.
Well, I call this in my column, if you forgive quoting myself again, the axis of prudence. I think there is a concern in the administration that is to some degree mirrored in Berlin, which is where I come from, that giving the Ukrainians too much of what they want at the same time would perhaps encourage them to conduct strikes into Russian territories in a way that might be considered escalatory, might provoke the Russians to either use nuclear weapons or to even attack a NATO country or NATO weapons deliveries. It seems to me that what we're seeing right now with these horrific attacks on Russian infrastructure, on Ukrainian infrastructure, we are seeing an escalation, and one that we're having a very hard time stopping. So I would perhaps focus on the air defenses. I would personally also argue giving the Ukrainians tanks, although there I think I understand why the US administration says the M1 Abrams is a beast that requires an immense logistical tail that would be very difficult to maintain across the Atlantic. And there it would make sense, it seems to me, to have a transatlantic division of labor and to organize a European tank provision consortium with the Americans perhaps providing more of the air defenses. It doesn't always have to be exactly equal on both sides of the Atlantic.
When I ask about Europe, I understand I'm asking about quite a few countries because you can't lump them all together. But is Europe in a position that they would support U.S. leadership on going much further?
I think it's let me put it this way: the axis of prudence is pretty strong in Europe as well, but it's been critiqued by European generals, by think tankers, by academics. The European Council on Foreign Relations wrote a very persuasive paper on what a European tank consortium could look like. Obviously, not all of the EU's member states have tanks that they can provide at short notice, but you're looking at 6 or 7 countries that would be capable of doing that. And I think what they would be looking for is a kind of American cover, not, I think, as it were, a green light from the Biden administration, but a joint decision to go a step farther, a package, as it were, where each side provides what it is best able to provide, which I think in the American case would be the air defenses and in the European case would be the tanks. That, to me, is a plausible package that would help the Ukrainians get over the winter while the Russians are still continuing to shell their cities and heating plants indiscriminately.
Ms. Stoltenberg, you mentioned you're from Berlin, so let me ask you about Olaf Scholz and exactly where Germany fits in all of this. He has been, I suspect, what you call part of the axis of prudence. Do you think that he is willing to go further?
My sense is that he's personally very reluctant. Interestingly, he's in the so-called traffic light coalitions with Greens and Liberals, who have been a lot more willing to entertain such calls. I think Scholz has just written a big piece in Foreign Affairs on his policy where he says that he doesn't want to go it alone. I think what that begs the question of is, what if you are supported by a lot of other European countries, and what if the Biden administration says, let's figure out a package where we all do something more together? It doesn't have to be the exact same thing. In other words, I think there is an opening in this formula, I don't want to go too long, for a joint action.
Finally, one of the striking things, at least to me, from President Zelensky's remarks before the Congress was he believes that 2023 will be the turning point in the war. Do you agree with that?
Well, we can only hope so. And the reason I say that is that I think this war has been costly in so many ways, not just to the poor Ukrainians, for whom it has been literally horrific and deadly, but also costly to the West and Ukraine's allies there and elsewhere. Let's not forget it also has allies in South Asia and in Asia. And I think we would do well to ask ourselves whether Western and other publics will find it easier to support an effort that is shorter and sharper but leads to success, or one that is much longer and becomes mired in controversy and difficulties. It's clear that Vladimir Putin and the Kremlin, with a great deal of support, unfortunately, in the Russian population, are in it for the long haul. And I think that should give us pause for thought.
That is very clear and very helpful. Thank you so much. That's Constance Stenzelmurner with the Brookings Institution. And now we want to keep you up to date with news from all around the world. For that, we turn to Madison Mills here with the first word.
Thanks, David. Italian health authorities will begin testing all travelers arriving from China for COVID-19. That policy change comes after almost half of passengers on 2 flights to Milan tested positive, and most of them were not showing any symptoms. The health ministry says they'll begin sequencing those tests to see if there are any new variants. If a new strain is found, officials may impose more curbs on travel from China. And the Vatican says that retired Pope Benedict's health is getting worse because of his age, and that Pope Francis has gone to visit him. Benedict is 95 and served as head of the Roman Catholic Church for almost 8 years. In 2013, he became the first pope in 600 years to step down. And the U.S. and the European Union called for an immediate end of tensions in northern Kosovo. That's the site where local Serbs have confronted ethnic Albanian authorities with protests for more than 2 weeks. That standoff bringing renewed tension in the region to the verge of a conflict. The minority Serb community in Kosovo is backed by the government of neighboring Serbia and its president. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Madison Mills. David?
Thank you so much, Madison. Coming up, we're going to talk with the former Secretary of Defense, Mark Esper. This is Bloomberg.